Welcome back to Iraqi Dinar Hub. Today, we're diving into a topic that has traders, speculators, and investors all over the world buzzing the latest speculation around the Iraqi dinar revaluation. The big question is, are redemption centers quietly rolling out new rates? In recent weeks, online forums and private investor groups have been flooded with claims about hidden rates being tested and more talk than ever about deleting the zeros. But before anyone gets carried away, we need to draw a clear line between rumor and reality. In this video, we'll unpack what zero deletion actually means, check the credibility of all this redemption center chatter, and give you a realistic perspective on what's truly possible. Stick with us, the insights ahead could save you from false promises and serious financial missteps. First, let's take a closer look at these redemption center claims. Every few weeks, a new round of stories pops up, suggesting that select banks or exchange centers are about to roll out an imminent revaluation. The script is always familiar. Someone online claims to have inside knowledge about secret meetings or exclusive rate adjustments, but no verifiable evidence is ever presented. These rumors have been circulating for years, sometimes even decades, without a shred of proof. If redemption centers were really exchanging at higher values, we'd expect to see hard evidence bank confirmations, official announcements, or multiple credible news reports. Instead, all we ever get are vague statements that can't be independently verified. Now let's clarify what deleting zeros really involves, because this is one of the most misunderstood topics in currency speculation. Many people mistakenly assume that dropping zeros automatically creates wealth, but that's not accurate at all. Zero deletion is simply a monetary reform that makes a currency easier to use in day-to-day transactions. For example, if Iraq removed 3 zeros, a 25,000 dinar note would become a 25 dinar note, but its purchasing power would stay exactly the same. Turkey did this back in 2005 for similar reasons. In other words, zero deletion is about simplifying the currency system. It doesn't magically transform foreign holders into overnight millionaires. So why is Iraq even considering this? The country currently operates with oversized banknotes because of past inflation. Everyday purchases often require 25,000 dinar notes, which is inefficient and confusing for citizens. By eliminating zeros, transactions become cleaner, banking systems run more smoothly, and accounting gets a lot easier. The Central Bank of Iraq has floated this option multiple times, showing they're serious about modernization. But it's crucial to understand this is a domestic reform for Iraqis. It's not a wealth-building event for outside speculators. Some investors link the idea of zero deletion with revaluation hopes, believing both could happen at the same time. Technically, it's possible, but historically, countries that delete zeros almost never revalue internationally simultaneously. Governments usually focus on stabilizing their own economy, not creating massive windfalls for foreign holders. If Iraq were to suddenly boost its exchange rate, it could backfire by making oil its main export less competitive on the global market. A rapid jump in value could shrink demand and hurt revenue, which is the exact opposite of what Iraq needs for economic growth. To understand this better, let's look at Iraq's current situation. The economy is heavily dependent on oil, which makes up about 95% of government income. The country faces recurring political instability, crumbling infrastructure, and budget shortfalls. These conditions make it highly unlikely that Iraq would suddenly lift the value of its currency. Most oil nations prefer to keep their currencies stable and moderately priced to ensure their exports remain attractive. If Iraq pushed its dinar too high, it would damage its position in the oil market and strain its fragile economy. It's also important to highlight the influence of global financial bodies like the IMF and the World Bank. Iraq works closely with these organizations to stabilize its economy and implement reforms. Any large-scale currency action would almost certainly involve their input and approval. Right now, there's no indication that either organization supports a sudden revaluation of the dinar. Instead, they typically promote gradual reforms and sustainable growth, not overnight currency shifts. This makes the idea of redemption centers secretly activating higher exchange rates even less likely. Another point worth noting is where these rumors come from. Many of them originate from websites, newsletters, and so-called gurus who profit from selling dinar or offering intel. This creates a direct conflict of interest. If they're making money by encouraging you to believe in a revaluation, their claims should be viewed with a heavy dose of skepticism. Reputable economists and financial advisors rarely, if ever, endorse the dinar as a guaranteed investment. The absence of serious discussion among professionals should be a massive warning sign that the hype is not grounded in reality. There are also some common red flags that every investor should be aware of. First, anyone offering specific dates for a revaluation is immediately suspect. Not even governments can time such events with precision. Second, stories about secret meetings or exclusive inside information almost always lack proof. Third, pressure tactics urging you to act fast before the opportunity vanishes are classic hallmarks of scams. And finally, promises of specific, enormous profits are simply not realistic. Legitimate investments don't come with guaranteed windfalls, especially in the foreign exchange world. So what outcomes are actually possible with the dinar? Iraq could eventually move ahead with deleting zeros as part of a broader modernization effort. That would make the currency more user-friendly at home, but wouldn't generate instant wealth for outsiders. The dinar might gradually strengthen in the long term as the country stabilizes politically and economically, but that kind of progress would take years, not days. Any appreciation would reflect slow, steady growth, not the overnight riches often portrayed by rumor mills. It's essential to remember that sudden, massive gains are not how currency markets work. Exchange rates move according to economic fundamentals, and Iraq's challenges make a dramatic overnight shift highly improbable. For speculators, holding large sums of dinar is a higher-risk strategy that is more likely to lead to losses than profits. Serious investors know that responsible strategies involve diversification, not putting all your capital into a speculative currency with an uncertain future. For those who still follow dinar chatter, skepticism is your best friend. New claims about redemption centers or hidden rates pop up constantly, but they've never been backed by hard proof. The pattern just repeats. Bold promises, no evidence, and then the same story gets recycled a few weeks later. If someone guarantees massive returns or claims secret access to rates, that should immediately raise doubts. Protecting your finances starts with questioning these narratives and demanding verifiable facts. To put zero deletion into perspective again, here's how it would actually play out. Iraqis would exchange their old banknotes for new, smaller denominations during a transition period. The old currency would be retired, but everyone's purchasing power would remain unchanged. For foreign holders, nothing material changes, your investment value stays the same. The purpose is logistical, not profitable. Yet online communities often spin this into a promise of sudden riches. Meanwhile, Iraq continues to push forward with broader economic reforms, improving its banking systems, stabilizing inflation, and upgrading financial infrastructure. These steps could gradually strengthen the dinar, but progress will be incremental and aligned with Iraq's actual growth. Sudden overnight reevaluations are just inconsistent with real-world economics. Genuine value is built over time, not through dramatic speculative leaps. It's also vital to weigh the risks. Currency speculation is risky, even in developed markets. In countries with ongoing instability, that risk multiplies. Large holdings of dinar tie up money that could be earning better returns elsewhere. The opportunity cost of waiting for an unlikely event is often overlooked. That's why most financial professionals recommend spreading investments across safer, proven assets instead of concentrating everything into one higher-risk bet. So why do these rumors persist? Psychology plays a major role. The hope for quick wealth, an emotional attachment to inside intel, and the lure of a once-in-a-lifetime payoff keep people hooked. But investment decisions shouldn't be driven by emotion. Rational research, fact-checking, and risk assessment are your real safeguards against financial mistakes. The repeated lack of proof over many years should speak much louder than any recycled promise. In closing, the key message today is simple. Stay alert, stay critical, and rely on verified facts. Iraq may eventually delete its zeros, but that's about simplifying its domestic financial system, not creating instant fortunes for outside investors. Rumors about redemption centers and secret exchange rates recycle endlessly without a shred of confirmation. Anyone claiming to know with certainty about a massive revaluation is not providing credible information. Safe investing means understanding risks, questioning sources, and avoiding hype. Thank you for watching this dinar update. If you found this breakdown useful, please like the video and share it with others who might be following the same speculation. Drop your thoughts or questions in the comments. We'd love to hear your perspective. Remember, patience, research, and caution are your best allies in any investment decision. Change is gradual, not instant. Stay informed, protect your wealth, and follow Iraqi Dinar Hub for facts you can trust.